Harmony Gold is making a bold move in its copper ambitions. The miner has announced it will acquire Mac Copper in Australia for nearly 18.4 billion, giving it full ownership of one of the country's highest grade copper operations, and that's the CSA mine. This aligns with Harmony's broader strategy of transforming into diversified gold and copper producer, and also comes at a time when the global energy transition is really boosting demand for copper. Joining us now to take us through the significance of this strategy behind the deal is Boipelo Lekubo, or rather Dikubo, the financial director at Harmony. Boipelo, thank you for joining us on Power Business. Let's dive in. What were the key strategic motivations for acquiring Mac Copper and the CSA mine, and how does this move fit into Harmony's broader transition toward copper?
Good evening, and thank you for having me. So Harmony, our strategic objective is to transform into a lower risk, high quality international gold and copper producer. So similar to Eva Copper, which we already have in our stable, when searching for additional opportunities and acquisition targets, they need to meet our set investment criteria and guidelines, and CSA Copper met these core investment criteria and improves our quality or portfolio quality, that is. In terms of key highlights, it supports our reserve life and it provides long-term production stability, and importantly, it's immediate cash flow generation. On top of that, as you rightly mentioned, it fits well in terms of our geographic diversification as well as commodity mix diversification. Being a primary gold player, having copper in the portfolio does aid just when in terms of commodity cycles. So it was a perfect fit.
As mentioned earlier, this deal is valued at over $1 billion US. What makes it a value accretive acquisition, especially for Harmony's shareholders in the long run?
So yes, as you rightly say, it is valued at over $1 billion. So it's an all-cash offer of $12.25 US per share, and it implied a full value for MAC of just over $1 billion. So it was a 21% premium to MAC's share price, but we believe that we've paid full value for it. As I've said previously, it does add immediate cash flow. It is already in production, so it immediately adds towards Harmony's existing EBITDA and cash flow.
So you've mentioned the mine's strong cost profile and expected free cash flows, but how significantly will the CSA mine shift Harmony's earnings, but also looking at your margin profile?
So at the moment, in terms of MAC, they are reporting EBITDA of around $168 million. And you're looking at an EBITDA margin of close to 49%. So that, as I say, immediately adds towards Harmony's already existing EBITDA and cash flow.
So Harmony brings a strong underground mining expertise. What operational synergies do you expect to unlock, especially with other assets like Hidden Valley and Eva?
Yeah, so this particular asset is located in an area called Cobar. So it is almost decoupled from our existing Hidden Valley operation, which is in Papua New Guinea. Eva, on the other hand, is an undeveloped asset, so that would still need to be developed. Where there are synergies, we have a hub that is operating from Brisbane, which supports our Papua New Guinea operation. So together with the already more strong team already existing at MAC, leveraging off the capabilities that we have in our Brisbane office, we'll see those immediate synergies, bringing on board, as you say, our deep level mining expertise to the operation.
One exciting part of this acquisition is the marine mine development within CSA. How crucial is it for expanding production capacity over the next 2 years, if you will?
It definitely is important. I think that's, as we say, if we can, it's just that additional value unlock towards the production outlook of CSA.
So from an investor perspective, the acquisition is being funded through a $1.25 billion US bridge facility. What's your refinancing plan, and how will this impact your capital structure?
So yes, as you rightly say, it's a $1.25 billion bridge loan. We are already in a very strong cash position. At the end of March, our net debt, or rather net cash, stood at just under 11 billion rand. So what we did, what the bridge loan does is offer deal certainty. And in terms of the refinancing options, we will investigate that in due course and just have a look at how we take that out with the most competitive and value-enhancing sources of financing.
There are some royalty obligations to Nosipho and the Glencore tied to this deal. Can you walk us through how these will impact the mine's cash generation potential?
Sure. So there is a silver stream and a copper stream, which is with Nosipho. And these obviously are streams that we will inherit. Just simply and high level with the silver stream, that's 100% of silver that is delivered to Nosipho, and there's a 4% cash payment that is delivered to the mine. And on the copper stream, at the moment, it's 3% of copper produced that is delivered. And again, the 4% of copper price that is delivered to the mine. So in terms of the deal closure, we will see how best to optimize this. It is already fully valued in our valuation. So whatever we do over and above to optimize these structures would be additional value on top of the actual deal.
Power Business brought to you by MTN. A quick reminder that we are in conversation with Boipelo Dikubo. She's the financial director at Harmony Gold. Of course, this evening, Harmony Gold making a bold move in its copper ambitions in our focus. And the miner has announced it will acquire MAC Copper in Australia for nearly 18.4 billion rand, giving it full ownership of one of that country's highest grade copper operations, and that's the CSA mine. Let's speak about expansion now, Boipelo. This deal positions Harmony more firmly on the global map. How does this move then strengthen your competitiveness among mid-tier and global major miners?
Sure. I mean, at the moment, it definitely solidifies us amongst the top copper producers. CSA, together with EVA, once it's on stream, will deliver almost 100,000 kilotons of copper per annum, which just given where copper is and the fundamentals driving copper going forward, puts us in good stead on top of our already existing gold portfolio.
Australia is considered a tier 1 mining jurisdiction. What advantages, whether it be regulatory or otherwise, do you foresee from deepening Harmony's presence in that country?
Yes, I think for us immediately it's that, as I mentioned, the geographic diversification. It is a tier 1 jurisdiction. We enjoy good support from the various streams in the country. So it is complementary to our existing portfolio.
So what has been the early shareholder feedback so far, and how are you planning to ensure a smooth operational integration to this?
Yeah, so we have received good support, as you know, since announcement, having spoken to various shareholders and analysts at large. I guess one would have noted the drop in our share price, but I think one can look at it mainly in three ways. A deal of this size would garner such a response. It is $1 billion. Second to that is that we are highly geared to the gold price, and that's in terms of our existing gold portfolio. So when you do see a drop on gold, physical gold, then you would see a drop on our share price, and ours would be more elevated than a player who's not highly geared. So, and again, on the day, most of the gold players were down. So, it's one can read it into it what you will, but you would see those movements typically on such an announcement.
That was Boipelo Dikubo, the financial director at Harmony, giving us a deep understanding of the landmark 18.4 billion rand acquisition of MAC Copper in Australia. This is a strategic move, really positioning Harmony as a global player in both gold and copper mining.